What if Bitcoin's next bull run didn't end in a year or two, but kept roaring for an entire decade? Sounds far-fetched, right? Yet one of the world's largest asset managers, we're talking $5 trillion, under management just hinted that Bitcoin may be entering a 10-year supercycle. That bombshell has crypto investors buzzing. Did we accidentally time travel into the early stages of some epic Bitcoin boom? Stick around because the signs are getting harder to ignore, and by the end of this video, you might start to see why some believe a decade of growth could be on the horizon. But if that's true, there's an even bigger question. Why isn't Bitcoin's price already exploding? That's where things get really interesting, and that's exactly what we're about to discover. Right now, Bitcoin is hovering around the high five figures, roughly $87,000 per coin. Sure, that's impressive historically, but let's be honest, it's nowhere near the wild predictions many enthusiasts had for this cycle. Remember when everyone and their barber was calling for $200,000, $500,000, even $1 million Bitcoin by now? Those sky-high targets haven't materialized. In fact, Bitcoin's current price is far below some of the boldest forecasts, and it's causing a wave of doubt. Is Bitcoin broken? Did the 4-year cycle magic fizzle out? Crypto Twitter is full of uneasy questions. I'll admit, I've felt that uncertainty myself. After riding through multiple boom and bust cycles, you start wondering if the old patterns are fading or if something's wrong this time. Yet at the same time, there's a growing chorus of serious voices whispering a very different narrative. Take Michael Saylor, for example, the man who bet billions of his company's dollars on BTC. He's not sweating that it's only $87,000. Why? Because Saylor believes Bitcoin is grossly mispriced at these levels. He's publicly said Bitcoin isn't just another asset, it's digital gold on steroids. And he expects it to subsume the entire gold market cap eventually. That's a $10+ trillion target, implying prices in the high 6 figures per coin. In his eyes, today's price isn't a disappointment. It's a screaming opportunity, and he's not alone in that conviction. Consider what just happened in the halls of high finance. Fidelity Investments, yes. That Fidelity quietly dropped a research note suggesting Bitcoin is on the cusp of a decade-long supercycle. Pause and think about that. Fidelity manages around $5 trillion for pension funds, endowments, and the like. These aren't moon boys on a forum. This is as institutional as it gets. When a $5 trillion asset manager even mentions Bitcoin and Supercycle in the same breath, you know something has shifted. It's the kind of moment that makes even cynics raise an eyebrow. So here we have a striking contrast. Skeptics see a sluggish Bitcoin underperforming expectations, while heavyweights like Saylor and Fidelity are more bullish than ever. Both can't be right, or can they? Let's dig deeper to unravel this puzzle, because the answer might redefine how we think about Bitcoin's future. To figure out if Bitcoin is really entering a supercycle, we first need to understand what that even means. The term supercycle actually comes from commodities like oil, copper, and gold. A commodity supercycle is basically a prolonged period, often 5, 10, even 15+ years of sustained price growth. It's not a steady straight line up, but overall prices keep climbing much higher than their old trend, driven by some massive structural force. The classic example, the 2000s commodities boom, often called the China supercycle. As China and other emerging economies industrialized at warp speed, their insatiable demand for raw materials sent commodity prices through the roof for about a decade. Oil went from around $20 a barrel in the early 2000s to nearly $150 by 2008. Copper, iron, wheat, you name it. Prices surged dramatically. That supercycle eventually cooled off, but not before making a lot of believers and a few fortunes. So a supercycle in Bitcoin would mean Bitcoin enters an extended bullish phase, potentially a decade of predominantly upward momentum, far beyond the typical 4-year boom-bust rhythm we're used to. In other words, the famous 4-year halving cycle could fade in importance, replaced by a longer, more powerful trend. Instead of a quick spike to a blow-off top and then an 80% crash, a supercycle might look like a series of higher highs and higher lows spanning many years. Corrections still happen, but none as devastating as before, and the overall trajectory stays up. It's like shifting from a fireworks show to a bonfire, less explosive at any single moment, but burning much longer. Why would that happen now? Let's list out what could fuel a Bitcoin supercycle. First, mass adoption and mainstreaming of Bitcoin as an asset class. If there's one thing that's different about this cycle, it's the caliber of players involved. We have major Wall Street institutions and governments circling Bitcoin in a way that simply wasn't true in 2017 or even 2021. For instance, multiple Bitcoin spot ETFs have launched or are about to launch, opening the floodgates for traditional investors' money. BlackRock's iShares Bitcoin Trust, IBIT. Yes, BlackRock, the $9 trillion gorilla, went live and gathered over $16 billion in just its first few months. That's an avalanche of institutional cash that wasn't in play during previous bull runs. And guess who just joined the party? Vanguard, another multi-trillion-dollar asset manager, recently lifted its long-standing ban on crypto ETFs and started offering Bitcoin exposure to its clients. We're talking about $8 trillion worth of conservative investors now getting access to Bitcoin. When you see ETF volumes surging and big funds embracing BTC, it hints at a new structural demand that didn't exist before. Second, global economic shifts are tilting in Bitcoin's favor. Think back to why commodities had that super cycle. It was a huge new demand wave, emerging markets colliding with limited supply. For Bitcoin, what could the analogous wave be? Possibly the combination of monetary inflation concerns and a search for alternative stores of value. Over the past few years, governments printed trillions of dollars in stimulus, interest rates went wild, and faith in traditional finance was tested. Bitcoin, with its hard-capped supply, started to shine as digital gold. Even some sovereign wealth funds and nation-states are eyeing Bitcoin as a strategic asset. An eye-popping example, the Prime Minister of the UAE officially declared Bitcoin and crypto as a new sector of the national economy. Imagine that a country whose wealth is built on oil is now embracing Bitcoin as part of its economic future. When a leader of an oil-rich nation says crypto is a new economic sector for their economy, it's not just talk, it's a signal that oil money could start flowing into digital assets. Oil money heading into BTC soon, as one headline put it. If petrodollars and sovereign funds start allocating even a small percentage to Bitcoin, we're talking trillions in potential buying power. And how about tech billionaires and corporations? We've seen companies like MicroStrategy treat Bitcoin as a treasury reserve asset. PayPal, Square, and others have integrated Bitcoin. Heck, even the conversation around central banks and ETFs suggests Bitcoin is becoming normal on Wall Street. All of these create a backdrop where demand for Bitcoin could stay strong year after year, rather than just in short, speculative bursts. Now let's not forget the supply side of Bitcoin, the famous halvings. Every 4 years, the Bitcoin block reward gets cut in half, typically igniting a supply shock rally. That's been the rhythm: supply drops, price surges, then hype calls, and we get a bear market. But what if in a super cycle scenario, these halvings still happen? They will by code, but their impact is smoother and longer lasting. If institutions are steadily accumulating, they might soak up the newly mined BTC continuously, preventing the brutal oversupply sell-offs we saw in past bears. In a way, strong structural demand can mute the boom-bust extremes. The result, Bitcoin's price could trend upward more consistently with corrections that are milder and shorter. We already have a glimpse of that. Recently, Bitcoin plunged overnight from about $90,000 to $83,000 on some shock news. But when US markets opened, institutional buyers through ETFs completely reversed the drop within minutes. Retail panicked sold. Institutions gobbled it up. That kind of rapid recovery is something we didn't see in prior cycles dominated by retail. It's a small example, but it hints that a new safety net of demand might be forming under the market. All of this paints an exciting picture. If Bitcoin truly is entering a super cycle, the next 5 to 10 years could look very different from the last 5 to 10. Instead of a meteoric rise and heartbreaking crash repeated over and over, we could be in for a longer, more gradual climb to levels people once thought impossible. Fidelity's analysis explicitly compares it to the 2000s commodity boom, a multi-year macro trend, not a flash in the pan. Now, before we all start throwing celebration parties, we need to address the big elephant in the room. What could go wrong? Because trust me, not everyone is convinced this supercycle theory will play out so neatly. Quick side note, if all this talk of cycles and macro trends has your head spinning, you're not alone. Crypto can get complex, but you don't have to navigate it by yourself. We have an amazing community over on our free cheeky crypto educational Discord, where thousands of investors from beginners to pros share insights, ask questions, and learn together. It's a friendly space to get real-time updates, chart analysis, and honest conversations about crypto totally free. And for those who want to level up even further, check out Cheeky School, our educational platform, offering structured courses on everything from trading strategies and risk management to researching blockchain projects. We built these resources to help you sharpen your skills and confidence in crypto, all while avoiding common pitfalls. Education is power in this space, and we're making it both accessible and fun. All right, back to the supercycle debate. By now, the supercycle sounds pretty compelling, maybe even too good to be true. It's time for a reality check. Could all this just be hype wearing a fancy suit? Let's face it, we've heard grand claims in crypto before. Plan B's famous stock-to-flow model once projected 100,000 plus Bitcoin by 2021. That didn't happen. Tim Draper swore up and down we'd see 250,000 by 2023. Wrong again. History is littered with bold Bitcoin predictions that fell flat, so skepticism is healthy here. One concern, what if the 4-year cycle isn't dead at all? Bitcoin has an uncanny way of following its own historical rhythm. After every halving, we've gotten a bull run, 2013, 2017, 2021, each followed by a crushing bear market that wiped out 80% of value. Many analysts still believe this pattern will repeat until Bitcoin's market matures much further. Maybe we haven't reached that maturation yet. Perhaps the current cycle is just delayed or stretched, but not gone. In other words, we could still be due for a euphoric blow-off top in a year or two, somewhere well north of $100,000, followed by another brutal correction supercycle be damned. There's an old market saying, "This time is different," are the 4 most dangerous words in investing. Are we falling for that fallacy by thinking Bitcoin can magically escape gravity? Let's also consider macroeconomic risks. A supercycle assumes continuous demand and relatively stable external conditions. But what if a global recession hits? In a severe market crash, institutions might dump Bitcoin along with other assets. After all, despite the digital gold narrative, Bitcoin still trades more like a high-risk asset at times. If stock markets tank or a credit crisis unfolds, Bitcoin could absolutely see a sharp downturn, supercycle or not. We got a taste of that in March 2020, when a pandemic-induced panic sent Bitcoin plunging 50% in a matter of days. It recovered, sure, but it showed that in a liquidity crunch, everything's correlated. Some skeptics argue that if a recession strikes in the next couple of years, all bets on a steady Bitcoin uptrend are off. It might crash, delaying any supercycle dreams. Then there's the regulatory wildcard. Yes, we have ETFs now and more clarity than a few years ago, but governments can still rock the boat. A harsh regulatory move, like an outright ban in a major economy or punitive taxes, could scare off those new institutional players. Or imagine a scenario where Bitcoin faces a tech issue, perhaps a major hack on an exchange, or a bug, unlikely but not impossible, or even the long-term spectre of quantum computing cracking cryptography. These tail risks could interrupt any supercycle trajectory. Also, even within the Bitcoin community, not everyone buys the supercycle idea. Some veteran traders say this talk comes up every bull run as a form of hopium. In 2017, there were whispers of maybe it'll just keep going up. In 2021, Dan Held popularized the supercycle idea, theorizing that unprecedented global adoption and money printing might send Bitcoin on an unfathomable run, but then 2022's bear market arrived and humbled that theory. One could argue, what truly has changed this time? Are ETFs and some institutional money enough to break a pattern ingrained in Bitcoin's very design, the halving supply shock and subsequent demand exhaustion? Critics of the supercycle warn that believing this time is different could lead to complacency, not taking profits when you should, or ignoring signs of a top because you're convinced it's a new paradigm. And I'll be honest, I wrestle with these doubts too. I remember late 2021 when everyone was euphoric, myself included, thinking we'd see $100,000 in a flash. It didn't happen, and it was a humbling lesson. So it's only fair to question, are we chasing a fantasy with this decade-long bull market idea? Before we answer that, let me slip in something super important here. Don't worry, we'll get right back to the story in a second. This might shock you, but I'm not a financial advisor, and nothing in this video is financial advice. Cryptocurrencies are highly volatile, and you could lose all the money you invest. You should always do your own research and consult a qualified professional. After all, your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses, and this video is for entertainment and educational purposes only. Alright, with that essential disclaimer out of the way, let's dive back in. We've laid out the bullish case and the reasons to be cautious. Now it's time to resolve this tension. Is there a way to reconcile these two narratives? What's the smarter perspective to take as investors who don't have a crystal ball? Maybe the reality isn't as black and white as supercycle true or supercycle false. Let's step back and consider a reframing. What if Bitcoin is in the early stages of a long-term uptrend, but it won't be a smooth ride? In other words, quasi-supercycle. The idea here is that the overall direction for the next decade could indeed be strongly upward because of the institutional adoption, global economic factors, and technological maturation we discussed, but will likely still experience mini-booms and busts along the way. The cycles may not disappear, they could just change shape. Think of it like this. Zoom out on Bitcoin's chart from 2011 to now. What do you see? A jagged line that ultimately points dramatically up and to the right. Each cycle had a higher low than the last. If you blur your eyes a bit, the distinction between individual cycles starts to fade, and you see one big upward curve of adoption. From practically zero to $87,000 in 14 years, that's the real supercycle, perhaps. The story of Bitcoin's monetization on a global scale. In that grand story, the 4-year cycles are chapters, not the whole book. So here's the reframed mindset. Stop thinking in 4-year increments and start thinking in decades. Whether or not we get a technical supercycle, the key is that Bitcoin's fundamental trajectory appears to be upward over the long haul. More people, institutions, and even countries are adopting it year after year. Fidelity and BlackRock entering the chat is a generational signal of legitimacy and long-term demand. It suggests that Bitcoin isn't just a fringe speculation anymore, it's gradually becoming a permanent fixture of the financial landscape. That doesn't guarantee price will pump next month or avoid crashes, but it does suggest that over a span of 10 years, the value could be orders of magnitude higher than today. When I personally internalized this, it changed how I approach Bitcoin. I no longer stress about, will we peak this year or next year? Should I sell before the crash? Instead, I ask, where is Bitcoin likely to be in 2030? And how will I feel if I sold too early or didn't accumulate enough now? It's almost like adopting the perspective of those oil barons and bankers who are quietly positioning for the long game. They're not day trading the supercycle. They're setting the stage for the next decade of growth. And here's a twist. If enough investors collectively start thinking this way, focusing on long-term holding and accumulation, it becomes a self-fulfilling prophecy of sorts. Fewer people panic selling at the first sign of trouble, more buying on dips, and voila, the cycles do smooth out. Maybe not completely, but enough that we don't revisit those gut-wrenching 80% drawdowns, drops of 30% or 50%. Sure, they can happen even in a super cycle. Remember, commodities in the 2000s had pullbacks too, but the asset never loses its broader uptrend and quickly finds new highs as demand returns. It's also helpful to reframe what a decade-long bull run might actually look like. It doesn't mean green candles every week. It means that each year perhaps ends higher than it began, on average. 2 steps forward, 1 step back. Repeat that still net 7 steps forward after a while. If Bitcoin is, say, $300,000 in 2028, does it matter much if it dipped from $180,000 to $120,000 at some point in 2026? Those dips would be opportunities in the grand scheme, not game over crashes, if the supercycle thesis holds. Another reframing? Consider Bitcoin's role in portfolios by 2030. Fidelity and Vanguard aren't interested in Bitcoin because they want to trade memes. They see it as a strategic asset class. Some analysts call Bitcoin millennial gold, or an insurance policy against fiat debasement. We might reach a point where a typical balanced portfolio has, say, 5% in Bitcoin. If that becomes norm, the amount of capital that needs to flow into BTC is mind-boggling. Total global wealth is hundreds of trillions. Even a 1% allocation worldwide into Bitcoin would push its market cap into the tens of trillions, i.e. multi-$100,000 prices per BTC. So the reframed question is not will the next cycle behave differently, but how do I position myself if Bitcoin is en route to becoming a multi-trillion-dollar asset over the next decade? From that angle, short-term timing matters a lot less. Whether we spike and dip along the way doesn't change the endgame, it only offers chances to accumulate more. This is exactly how many big players see it. The UAE's embrace, Saylor's conviction, Fidelity's projections, they all indicate a belief that Bitcoin today is undervalued relative to where it's eventually headed. They're basically saying, zoom out. The rest of the world hasn't caught up to Bitcoin's value proposition yet. But it will. So what does all this mean for you and me sitting here right now? Let's imagine the supercycle, or whatever you want to call this evolving dynamic, is happening. How would that knowledge change our approach? Well, for starters, it could mean that the greatest risk is no longer the periodic crashes. It's being out of the market when the big moves happen. Think about it. In past cycles, the fear was holding too long and riding a huge loss. In a supercycle scenario, the fear shifts to selling too early and missing the multi-year ride upward. It's a profound flip in mindset. If Bitcoin truly is entering an era where it grows from a roughly $1.5 trillion asset at $87,000 per BTC to, say, a $5 or $10 trillion asset, which would put BTC in the 250,000 to 500,000 plus range. Then accumulating and holding with diamond hands becomes a very powerful strategy. It means treating Bitcoin less like a trade and more like an investment, like how you treat real estate or a retirement fund. Sure, you rebalance occasionally, but you don't panic over every dip because you're focusing on the end point. As long as the fundamentals and adoption metrics keep improving, dips are viewed as chances to buy more at a discount. On the flip side, if you're a shorter term trader, acknowledging a potential supercycle could save you from one major mistake: underestimating the top. In a traditional cycle mindset, one might plan to sell everything at, say, $150,000, because historically that would be an outrageous new high, and surely the cycle will crash after. But if this is a supercycle, selling all at $150,000 might feel good for a month or two until Bitcoin marches to $200,000, $300,000, and you're left hoping for a massive crash to get back in. Many early Bitcoin OGs have such regret stories. They sold at $1,000 thinking it will drop back to $100. Then Bitcoin went to $10,000 and never looked back. A supercycle could create similar traps at a larger scale. So the payoff here is awareness. Don't assume the future will look exactly like the past, especially when we have evidence of regime change in how Bitcoin is viewed. Let's also consider quality of life as an investor. A supercycle framing can actually bring some peace of mind. Instead of feeling like you're on a 4-year roller coaster where you must time the exit perfectly or be wrecked, you can settle in and let the long-term trend work for you. It's almost like the difference between timing housing market bubbles versus just owning your home for 20 years in a growing area. The latter usually works out regardless of short-term fluctuations. If Bitcoin indeed becomes a backbone asset of the digital economy in the 2030s, being patient could be richly rewarded. Now, I want to be clear, this isn't a call to be reckless. Volatility is still the name of the game, even in a supercycle. But volatility is a lot less scary when the underlying asset has a strong upward drift. It becomes something to weather, not fear. Imagine if in 2015 someone told you Bitcoin will go from $300 to $69,000 over the next 6 years, but it will crash 50% 3 separate times during that journey. If you had a crystal ball confirming that outcome, you'd just buy and hold, right? The crashes wouldn't shake you because you know the long-term direction. While we don't have that guarantee for the next decade, the supercycle thesis is basically an argument that the conditions are in place for a similarly strong long-term climb, albeit likely with fewer extreme crashes than before. As we come to a close, I want you to take away this mental image. Bitcoin's story is evolving from a thrilling novel with distinct chapters into a more steady, ongoing saga. The early chapters, cycles, had crazy plot twists, bubbles and busts, but the overarching narrative was always an ascent. Now we may be entering the part of the story where Bitcoin truly comes of age, broader cast of characters, institutions, nations, everyday users, bigger stakes, and a more predictable upward character development, if you will. We might look back in 2030 and chuckle at how excited we were about $87,000. Much like old-timers now chuckle about being excited at $87 back in the day. None of this is guaranteed, but the pieces are falling into place. Trillions of dollars ready to pour in, global leaders legitimizing crypto, corporations and funds integrating Bitcoin into their models, and a worldwide recognition that the financial paradigm is shifting. If that doesn't get you at least considering the supercycle scenario, I don't know what will. The next decade for Bitcoin could be unlike anything we've seen, potentially less explosive in the short term, but far more explosive in the long term. And here's the kicker. What if this is the early days of that supercycle and most people won't realize it until it's half over? By then, Bitcoin's price could be much higher and the easy gains already made. It's a thought that keeps me up at night in a good way because it motivates me to stay informed, stay engaged, and stay prepared. So, is Bitcoin entering a decade-long supercycle? The evidence is saying yes, or at least probably yes, and that's a thesis no serious investor can afford to ignore. The smartest approach might be to position as if it's happening, yet remain agile in case the ride gets bumpy. In other words, hope for the supercycle, plan for volatility. That's my mindset right now. And one thing's for sure, the next 10 years in crypto are setting up to be a wild adventure, perhaps the greatest we've seen yet. The only question is, will you be watching from the sidelines or taking the journey? Subscribe or watch the next video.